Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Norm Liu. Norm is the CEO of Nordic Aviation Capital. He's joining us for the purpose of our Aviation News Report 2025. And we're recording this in Singapore on the day of the US presidential election. Norm, thanks again for joining us. Before we get into the meat of the conversation, do you want to tell our watchers a little bit about NAC?
Sure. Nordic Aviation Capital was founded back in 1990. It's historically a regional aircraft lessor, but we're transitioning a bit more to a wider array of aircraft types, principally narrow bodies. We're about 230 aircraft now, a bit over give or take $3 billion of fleet value, domiciled largely in Ireland, with still some historic presence in Denmark and Singapore and elsewhere.
Great. And maybe kicking it off to start maybe on the customer side in relation to airline demand, can you talk to us about how you've seen customer performance evolve and how the demand environment has been over the course of 24?
Yeah, I mean, the demand pretty much everywhere is in excess of 2019 levels. I mean, there's some pockets like long haul into China, partly because of demand and then partly because of Russian overflight limitations. That's a bit of a struggle. People have read about the U.S. low cost situation where that's been a struggle because the network carriers are doing quite well. There's a general move to premiumization. So there's some, but in general, demand is very good. The so-called revenge travel boom of sort of COVID times that's sort of largely finished. So you're back to normal cycle, macro, micro things. There is, I think things have been very good, but looking ahead, the RASM will face pressure, because people are under pressure from, inflated costs and the like. And then also, as the supply chain resolves itself and the capacity comes out, there'll be some pressure on RASM, and then every line item on an airline's expense base is going up, whether it's air traffic management, labor. You've seen all these agreements, capital costs on interest rates, and I think it's going to be back to normal basically.
Yeah, and it's that point I wanted to pick you on. You nearly answered it there in that where we sit now, whether it's geopolitical, whether it's macroeconomic challenges the airlines are dealing with, it's back to a little business as usual almost. Right?
No, absolutely, and back to normal. Business cycle. Some people are still facing leverage issues. Others are doing very, very well. So winners and losers. And I think the thing that's been a regression has been the geopolitical.
Yeah.
For many, the last few decades, it's been world is flat, everything's good. Now we're getting back to sort of a 1970s sort of world block type of thing. And so it's a bit regrettable. U.S.-China relations, are weak, and so that's sort of the one thing that is shifted. But it's actually back to back to decades ago.
And to bring in just one point on the demand piece, do you see any differentiation between, say, the wide bodies you're flying or the regionals you're flying, or is the demand environment broadly consistent?
Broadly consistent, yeah, because they all feed each other through a network. Yeah,
and then you'd stand back, Norm, and say that's broadly positive.
I think wide bodies, just because for a while long haul was behind, now it's been catching back up. Maybe it's a little bit better and all that, but it's broadly the same. Yeah.
And if we say that's broadly positive on the demand side, but taking in those kind of business as usual or standard challenges, right. Running an airline is very difficult. If we look then at the supply side, we're very aware, and actually as we sit here this morning, we found out that the Boeing strike has alleviated. That's one of their problems gone, right? But lots of others remain.
Right.
As you're sitting here as a large lessor with a couple of hundred aircraft, and whether you're trying to grow out your fleet, how impactful has the supply strain been on your business?
It's topic du jour. not just Boeing, but Airbus, the engine manufacturers, the MROs, the BFE part suppliers, alloy certification. The whole thing has been pretty clogged up. Never seen it as broad. Normally it's limited to like a 787 issue or 380 issue. This is across the board. What's happened is, if you think about the Boeing situation, the capex this year would be about 25 billion coming out the factories. Next year, thank God, we'll go up to 50. So that 25 billion is not there. So what happens is, if you're an owner of aircraft, a lessor, well, you can command higher prices on any secondary trades. You're getting extensions are largely done now in 24, 25, but you got to improve the extension rates. Airlines are buying back planes. If you're a buyer, if you're in the purchase leaseback market, PLBs are both primary with the airlines are quite competitive, and then secondary trades are quite rich right now, especially I think on the used NGCEO market. A lot of the used serviceable material players are being quite aggressive there. So eventually, it's going to resolve. I don't think this is a forever thing. This is like a couple years. In terms of the delivery delays, I think one of the things that might go beyond that is just the escalation. The cost, aerospace escalation is quite sticky versus general consumer price escalation. So I think while the deliveries may resolve, the escalation matters will continue, which is probably in the long term good for real assets. So.
Yeah, and there's a lot in that. And maybe to pull back on one of the pieces, I think Vera was saying, look, very supply constrained environment, persist for a couple of years. To the point you were mentioning there, what that should drive in an environment where interest rates are going up and demand is up and supply is down, is that lease rates rise. What have you kind of seen from a lease rate evolution perspective?
Yeah, I mean, for sure they've been rising, but probably plateauing now, because now the rate curves, rates are starting to drop again. So that's a driver. Also, supply will come back. That'll put sort of a cap on rates. Now, future deliveries are still indexed for manufacturer escalation, but in general, I think hopefully there'll be some good days ahead, but this was a pretty unique period. Now there are specific types, like with the 777X delays, it's good for 777-300ERs more recently, but in general, you're sort of in a plateauing world.
And feeding in then to the trading environment, which you touched on in one of your earlier answers, if we were here a year ago, people would have talked about a reasonably stodgy trading environment and not that much trading taking place. Your perspective, and I know in looking at Nordic, you guys have sold a fair degree of assets this year.
Yep.
What's your perspectives on the health of the trading market?
Oh, it's very, very active. Both on new tech and used tech, meaning NG. CEOs you see, because of lack of OEM capex, and there's primary POBs as well with the airlines, but you've seen the Avalon Castle Lake trade, which is largely a new tech driven trade. You've seen some of the top 10 lessors being quite active in the secondary, primarily focused on new tech to sort of reinvigorate the fleet. And then, as I said earlier, on the NGCEOs, you've seen the USM used serviceable material players being very aggressive to grab on the engine and spare engine components and things like that. And then we at Nordic have been active sellers of all aircraft types, ranging from E1s, the ATRs, the Q400s, and we've been seeing a pretty vigorous market from lessors, part out companies, and also airlines themselves. Yeah. If you have fly-ready aircraft, the airlines are ready buyers.
And in terms of kind of financially, from a Nordic perspective, I'm certainly doing things that make sense for you guys. But from a gains perspective, presumably that's coming through reasonably well in terms of those sales.
Oh, yeah, absolutely. I mean, some we're selling just for residual risk management, but yeah, our gains have been good.
Yeah. And maybe pivoting on the financing side into your just interest rate outlook and how that's impacting on the business. I think, Again, a year ago, I'd say the theme as we held these discussions was higher for longer. We'd had the whiplash of 22 to early 23 with the rate increases. What's your perspectives as we sit here in late 24 on the interest rate environment, and how does that feed into your business
Well, we have
planning?
a Fed meeting this week, and they did 50, and hopefully a couple more 25 basis points. And I think you're on that side of the hill. I think people are not sure how long that will continue going in to 25, and so we're on the right side of that. And quite frankly, we've taken advantage of that. So we refinanced our warehouse, which was SOFR based, to term swap base, right? So probably saved 150 basis points there, higher advance rate. And so, we're trying to take advantage of it with our smaller balance sheet best we can. And then there's probably scope for, as some of the B note markets, the ABS market, there's probably scope to maybe even put a higher advance rate there to get some cash out with B paper.
Yeah, and maybe bringing into that, can you talk us through maybe your perspectives on the health of the broader aviation debt market and maybe the types of products that have been attracted to you guys over the last 12 months or so?
Yeah, well, we're IG lessors have broad array, unsecured bonds, the whole, Sukuks, the whole array, banks all over the world. We're non-IG at Nordic, so we focus mainly on warehouse bank lenders, bilateral bank lenders, export credit agencies for some of our new deliveries. Some of the alt investment lenders have been lenders to us on sort of more, bespoke type of deals, or where we ran out of our exposure on the warehouse, we could borrow through them. A little bit higher rate, but more flexible. And so we've been availing ourselves of different, all these different types in our business.
Have you tapped the alternative lender market at all, and do you see that as something that will grow in importance?
Yes, yeah, we tapped actually PK Air Finance.
Yeah.
Altair have been lenders to us. In my GCAS world, I used to oversee PK, so sort of ironic. I'm borrowing from the very folks I used to oversee. But yeah, no, we're focused on, but it's mainly for bespoke situations.
Yeah.
Because they're a little bit on the higher cost side.
I was going to say, it's something that seems to be, in chatting to people, a useful product, but something that'll probably stay
It's an
relatively
adjunct.
niche.
Yeah, it's an adjunct. Yeah.
Yeah. No, that's understood. I know a product that probably, going back to your GCAS days, you would be more directly familiar with. But your thoughts on the ABS market, a market we've seen come back reasonably okay, right, over the last few months. Having had a lull driven really, whether it was Russia or interest rates, not a lot happened for more than a year. Your thoughts on the importance of that market to aviation finance, and just where you see
Well,
it
for
going?
a non-IG borrow, it's good to have available. And yes, for a while it was shuttered because of COVID, but also Russia-specific issues. And it's migrated back pretty fast. A couple quarters ago, you were talking about just unitranche deals, and more recently, people are sticking in B paper. And eventually you'll go back to ABC and E-notes.
Yeah.
Tradable E-notes. I don't think it's quite there yet, and so it's evolving quite quickly. There's good. I didn't get invited to. My team went to ABS Miami. I'm hoping to go to ABS Las Vegas, right? But
They picked the best locations.
So I'm going to make one of these things, but. My understanding is the aircraft paper trades a nice, even though it's improved, it's still a nice spread to sort of consumer auto paper of similarly rated type. So there'll be, beyond the ABCE advance rate, I think there'll be some spread compression as well.
Yeah, which I think, as you go back to your basis points question, we'll lose another 50, 75 basis points over the next 6 months or so. You'd like to think that market could get very attractive and interesting, potentially. Maybe moving on to the investor side, Norm, your thoughts around, I was phrasing this, I was chatting to someone earlier where I said, I look at aviation finance from an investment or an asset class perspective, and you might say on one side, outsized impact from COVID, outsized impact from Russia, on the negative, but on the positive side, just huge levels of resilience. That the businesses have been shown to stand up to those things and continue to flourish. Do you think, as an asset class, aircraft are more or less attractive than they were, or about the same versus maybe 2019?
Well, I think they've always been attractive because they're essential pieces of equipment for global transportation infrastructure. People need to travel, goods need to move. So they've always had this sort of infrastructure element to them, which is why I think just recently Stonepeak announced a deal to buy ATSG, a cargo lessor. So they're sort of infrastructure-y. And so the all investor community has come in, originally from the PE side, but now they're sort of migrating to the sort of private credit world. So you saw HPS, I think they're closing on the Falco transaction on regional. So, well, there's been some history. COVID, we've survived through because of the essentiality of the equipment. And then the yields are there. The core aircraft, the normal standard fare deals, they probably compare favorably to high yield bonds, maybe, core infrastructure. And then depending upon your risk appetite, if you go, out on the credit spectrum or on the asset risk spectrum, you can probably get into the sort of more, when combined with some secured leverage, you can probably get into the sort of private equity world of 15 to 20% range. So you can, depending upon your appetite, get the whole space, and it's reasonably scalable. So I think that's why people have already come in, and some are still probably coming in on the alt side.
Yeah, and maybe to bring you on that scale piece, and you mentioned, you obviously in the past been with a very significant investment grade lessor, a different place with Nordic, and maybe operating a slightly different piece of the market. Your perspectives on the importance of investment grade and whether or not scale is important in any sector, right?
Right.
Is it becoming of increasing importance, or it just means that you need to strategically play in different segments of the market?
Yeah, I mean, general business, scale, low funding costs are key. No different with aircraft leasing, and the top players. The issue is that they've grown so big. How do you scale further? I think if you're more, that's the triple B plus type of world. If you're double B-ish type world, you can be a player, maybe not as same scale in terms of asset amount, but you'll have to have a more niche-y, bespoke approach, a value-added approach. You might have to take some older aircraft. Might have to take, instead of the 321 Neo greatest, maybe a 320 Neo, slightly old. So you have to sort of pick your value spots. Maybe have to provide trade-out solutions, things like that. Spare engines are sort of an interesting business. So it's important for sure. But I think as long as you can avail yourself of, your classical bank warehouse funding, term loan Bs, that sort of paper, and start getting to a double world, you can play, but it has to be on a more niche value basis.
Yeah, so you kind of need to find your own USP. You're not going to be, competing at those very, very tight sale and leaseback pieces without that investment.
Exactly. It's both product niches and sort of tactics.
Yeah. Really interesting insights, Norm. But before we kind of close, a last question I'd like to finish with for people is, as we look out into 25, what are your optimism levels like?
Pretty strong, but I think it's guarded as always, because as we've talked earlier, the geopolitics have never been so so varied, and so hope. Events in the Ukraine, Gaza. Hopefully those things don't get much bigger. South China Sea. Those are the types of things that you monitor. You can't do anything about it. I think what's important to us is just being fast moving, agile, setting up SWAT teams to sort of manage through those issues. But generally, I feel very positive. But always watchful.
Yeah, well, on that hopeful note, I'd like to thank you as always on behalf of KPMG and Airline Economics, and wish you and Nordic Aviation Capital a very successful 2025.
Okay, thanks for having me, Joe. Thank you.